We believe at Pimco that EM has a very, very solid structural story. Structurally, EM countries are exhibiting root health, and we think that on the back of that very significant structural growth opportunity, one can realize very interesting equity returns. Also, from a cyclical standpoint, EM countries have started to undergo some mid-cycle correction, and that in itself has presented very interesting investment opportunities. We believe that markets are inexpensive. They trade slightly below their long-term average, and we think that the compelling features such as return profile of EM companies, as well as a strong trend earnings growth in comparison to their developed market peers on a 3 to 5 year basis, should compel investors to take a look at the field. Bubble and risk have faded partly because of, again, the worries about the mid-cycle rebalancing. So we have seen rotation out of EM. If you remember, back in February, we had some $25 billion coming out of emerging markets in a pretty short period of time. So that in itself has created opportunities for us to take a look at more cyclically sensitive areas such as infrastructure, financials, that have, again, deflated to the multiples that started to represent very little growth. EM opportunity, the way we defined it in the most unconstrained space. The funds that we run have over a quarter of holdings in non-benchmark counters. So we really look for the best equity opportunity that has an EM anchor. So we may find ideas, as we do in, say, London-listed Nigerian oil companies or in Canadian-listed miners. For us, this is an EM opportunity, and again, from equity standpoint, this is an interesting story. Well, we particularly favor in the equity space Russian and Chinese opportunities. Again, we are bottom-up stock pickers. Clearly, our decisions are taken in the context of macro views that Pimco has, but from the equity standpoint, equity counters in those countries trade at very undemanded level. As investors in particular, we look for companies that may have been affected by cyclical adversity and where the earnings story is likely to look better once the story is normalized. So in China in particular, we would say that the fears that have been induced by macroprudential measures are now aged, and stories within the more cyclical space look very interesting. We would say that financial and property stocks represent an interesting proposition. One clearly has to be stock-specific in the choice, but again, this is the space where, in property space in particular, where companies trade at significant discount to their net asset values. We have seen, again, 18 months of macroprudential measures underway. We have also seen the reflection of those worries in the equity markets. We have also seen some price reactions that have been taken by developers, and those price actions, again, should alleviate some of the fears by the authorities. We do have a large overweight in China, and that is a reflection of obviously a favorable view on yuan. I would say that one of the features one of the key features of emerging economies is the brevity of economic cycles. So if you take a look at a large economy like Brazil, if you were to look at the amount of infrastructure that the country has relative to the growth it is exhibiting, the growth rate it is exhibiting, there is clearly a disconnect. So that lack of infrastructure and shortage of labor creates, clearly situations when the output gaps close and you have inflationary pressures. So we are experiencing the need for that mid-cycle rebalancing in places like Brazil, in a place like Turkey, and ultimately we think that the policymakers will react as they have reacted in the case of Brazil, and that rebalancing again should bring economy back to the right footing. At the moment we're underweight Brazil. This is a reflection that we can find better value elsewhere. We are looking for commodity complex that represent again better value in other parts of the world. The domestic stocks, in our view, are still fairly expensive, and again we would look for that rebalancing to potentially present opportunities in this structurally very compelling case. I would say that India and Turkey are the places we're yet to find, I guess, our balance and our peaks. These are areas that I guess are likely probably to become cheaper before they start rising in value. But this is on the right track of discovering value. We have holdings in places like Kazakhstan. Again, these are stock-specific opportunities. We have holdings in Canada and Australia. So you may call it surprising. Again, for us, these are EM opportunities. We hold a position in a developed market tobacco stock that is geared on emerging growth, and the reason we do that is that it's a very, very strong equity story, and it's a story that represents better value in the staple space than its emerging market peers. So again, we are agnostic as far as the listing of the stories is concerned, and we very much look for the best return asymmetry in the space.